Welcome to Finance Sensibility. Today we're diving into the fascinating world of neobanks. These digital-first financial institutions are shaking up the banking industry, but the big question is, are neobanks the future? Could they truly replace traditional banks? In this video, we'll explore what makes neobanks unique, their benefits, challenges, and whether traditional banks can keep up. Stick around for some surprising facts and insights that might just change how you think about money management. What are neobanks? Neobanks, also known as digital-only banks, operate entirely online without physical branches. Think of popular names like Chime, Revolut, or Monzo. These banks leverage cutting-edge technology to offer services like checking accounts, savings, and even loans, all through an app or website. What sets them apart? Neobanks pride themselves on user-friendly interfaces, real-time notifications, and low fees. Unlike traditional banks bogged down by legacy systems, neobanks are agile, adopting AI, blockchain, and advanced data analytics to personalize the banking experience. For example, if you're in the UK using Monzo, you'll receive an instant notification for every transaction, down to the pennies spent on coffee. In the US, Chime helps users build credit with fee-free accounts. And in Canada, neobanks like Koho focus on cashback and financial wellness tools. Why are neobanks so popular? Neobanks are gaining traction, particularly among millennials and Gen Z. Here's why. Convenience. Everything is mobile. Whether it's depositing a check, transferring money, or applying for a loan, you can do it all without stepping out of your home. Low fees. Say goodbye to overdraft fees and minimum balance requirements. Neobanks are designed to be cost-effective. Personalization. AI-driven insights help users manage spending and savings more efficiently. Inclusivity. Many neobanks serve underbanked populations who find it difficult to access traditional banking services. As of 2023, over 1.4 billion people worldwide use neobanks, and this number is growing rapidly. Challenges neobanks face. Despite their success, neobanks are not without hurdles. Trust issues. Consumers often feel more secure with traditional banks, especially when it comes to large savings or investments. Profitability. Many neobanks operate on thin margins, relying on venture capital to stay afloat. Limited services. While great for basic banking, neobanks may not offer mortgages, wealth management, or business loans like traditional banks. Regulation compliance. Navigating the strict financial regulations in the USA, UK, and Canada can be tricky for digital-only platforms. Take the case of Revolut, which faced regulatory scrutiny in the UK for anti-money laundering practices. These challenges highlight why traditional banks still hold significant ground. The traditional banks fight back. Traditional banks are not sitting idle. To counter the rise of neobanks, many are adopting digital strategies. Hybrid banking models, offering both physical branches and robust online platforms. Partnerships, collaborating with fintech companies to innovate. For example, JP Chase partnered with OnDeck to offer faster small business loans. AI integration. Traditional banks are investing in AI tools for fraud detection and customer service. Bank of America's virtual assistant Erica has helped over 10 million users manage their finances. Are neobanks the end of traditional banks? So will neobanks replace traditional banks? Not entirely, at least not in the near future. While neobanks excel in innovation and convenience, traditional banks offer stability, a broader range of services, and the trust built over decades. However, the future may see a blend of both worlds. Traditional banks may continue to adopt fintech strategies, while neobanks might expand their offerings to compete more directly. Surprising facts about neobanks. The first neobank, Simple, launched in 2009, was acquired by BBVA in 2014. In 2023, neobank investments crossed $50 billion globally. In Canada, nearly 40% of young adults prefer neobanks over traditional banks for their everyday transactions. The rise of neobanks signals a shift in how we view banking. They've challenged traditional banks to innovate, made financial services more accessible, and introduced a level of personalization we've never seen before. But traditional banks still hold the advantage in trust and diversified offerings. The likely scenario: a harmonious coexistence where both adapt and evolve to meet consumer demands. So what do you think? Are you ready to go fully digital with neobanks? Or do you prefer the tried and true stability of traditional banks? Let us know in the comments below.